Hey folks, it's Simon here with your Tao Daily update for Friday the 7th of March 2025. Happy Friday. The markets had another rough session overnight. You can see here the Nasdaq down 2.75% on Thursday, officially entering correction territory, having fallen 10% from its all-time high. Corrections always feel scary and lousy when you're going through them, but they're not uncommon. We typically have at least one a year on average. The last time the Nasdaq had a 10% plus drop was back in August. This is when the yen-mageddon scenario was unfolding. Everyone was talking about the yen carry trade. Now, here's the funny thing about the behavior of market participants and market psychology. When markets are rising strongly and at all-time highs, nobody wants to hear anything bearish. You make a bearish comment, you even say, hey, maybe you should think about hedging here. People will mock you, people will be very derisive. Similarly, when markets are falling, everybody, the crowd, gets really bearish. So when the market falls, everybody gets bearish, nobody wants to entertain bullish thoughts, and this is a mammalian response, okay? It's the old bandwagon effect, the old safety in numbers theory. And our survival instincts encourage us to go with the herd to try and keep us safe. But in markets, going with the herd, it can often be a very tough way of making money. Now, what I want to share with you is one of my favorite charts. This is the Tram chart. And what we've got on here is the magic bars indicator. Bright green magic bars indicate a strong upward trend. Dark green magic bars indicate a weak upward trend. Bright yellow bars indicate a strong downward trend. Bright red bars, strong downward trend. Dark red bars are a weak downward trend. So the trend appears to be accelerating here. But what we've got also are the tram tracks. And this is important because typically when an index gets down to this green bottom line, it doesn't have much further to fall and it's due for a bounce. You can see it happened here and here and here. And then if you look at the August last year, we got a bounce here. We did make an ultimate further low, and then we got a pretty decent bounce, and that was the start of an uptrend. We came down to touch that level here, and that was the start of an uptrend. So we come down and we've touched this level here right now. So what this tells me is that we are closer to a short-term bottom than we are to a top. Now, I'm not saying that this is the bottom and that we're going to rally to new all-time highs, just reiterating the point that now is a bad time to press short bets. Right now, I've got a fairly low market exposure. I've got a combination of long and short positions on. I don't have a strong directional lean here at all, but I'm certainly not leaning into my shorts given the statistical probability of a mean reversion here. Now, how do we know that everyone's bearish when the market's falling? Well, sentiment data can be a handy clue. And what we've seen, and this data is actually a week old now, but even though the market is near all-time highs, this is the 7th highest spike of bearish sentiment of all time. So when everyone's bearish, that's usually a sign that something is about to change. That's what I got for you today. I hope you have a great weekend. I wish you good trading, and I will catch you next week.